Hello, today, Monday, November 6th. I'm back with my buddy Imran for our Monday morning meeting. How you doing, Imran?
I'm good, man. Good to see you.
We missed last week
We
for
did.
personal reasons, but the market went bananas. So maybe it's good because it didn't run us over, right?
Yeah.
I wanted to start today. Generally, you and I focus on single stock ideas, but there's a theme in here that I saw with your two stock selections, and then what I'm going to show is kind of what's interesting for the week. But it's this ridiculous rally that we've had, and I say ridiculous just because it's been so, the move's been so large. So as you can see here, from the lows of pre-FOMC, we're up 6.5% in the SPX. That is something else, right? And I think that's a lot of short covering, and people have bid up everything now that rates have apparently come down for forever and in perpetuity, and everything is good. So this move frames, I think, what you and I are going to be flagging today as what opportunities may be over the next week or two. I want to mention this quick and get your feedback on it. I don't want to dive into the whole macro stock landscape, but I call this now the phase transition. Implied volatility has been crushed. We had this massive rally. Rates, have taken their breath. The VIX has gone from 20 down to 14s. So I call this the phase transition from kind of the ripping directional huge rally. OPEX is next week, and I think we're going to start to pin this week, and a lot of moves are going to start to consolidate. Do you have any thoughts on that kind of macro, SPX, not macro economics, but macro, index level?
Yeah. Big picture. I agree. I think, there was definitely a setup for a squeeze. There were shorts, bearish sentiment. There was elevated vol, elevated skew. There was a potential war that could escalate. There was a lot of fear factor.
The war is still there, as far as I last heard too.
Yeah, there was a lot of fear factor, and so therefore, when we got such a big vol reset after the QRA came in light and FOMC was marginally dovish, when we got that big compression of vol, that is usually your Vanna rally that kicks in, right? As Delta gets covered. So the setup was there for that. It basically gave you a very fast rally. Some of the explosions we saw in name the ARK basket, were unbelievable, right? Roku was up 30% in a day, right, on earnings, right?
Yeah, I mean, look at that ARK move. It's just
insane. You had Block up massively, Shopify up massively. So ARK's back to quite a big resistance level here. So I've got a trade idea for my subs on ARK to play a bit of a consolidation on that. But I think at the margin now, because the move was so violent, I would probably look for some consolidation. Certainly, I think realized vol is going to come off a bit of a cliff.
100%,
right?
Yeah.
So, people look at historic realize and go, oh, it's moving so much. Why wouldn't you buy Gammon now? Because it's so cheap. And it's like, that's the whole point, right? Historics are historic. That's the word.
Yes.
It's looking at history, whereas the implieds are forward looking and telling you the market anticipates less vol now. And part of the reason it anticipates less vol is because dealers are now a lot longer than they were a week or two ago, right? So that's what I think.
Very, very well said. The green line here is 1 month realized vol. So we're at like a 15, and the move up actually helped to hold this realized vol up, if anything, right? Because the moves have been so large. So I think we come down into kind of the 11s in short order, with OPEX being next week. To your entire point, the forward versus kind of realized implied volatility. In our founders note this morning, we put this chart on Twitter if you want to take a look at it. But this is the difference between VIX, which essentially looks at 1 month forward implied vols in the SPX versus 1 month realized. And you could see this collapse, right? So the peak here was when we were all worried about hedging the wars on Friday night, right? Plus the rate concerns, bid up VIX to 20, and now the VIX has collapsed, and so that premium has come off. This is Vanna fuel as that VIX collapses, implied vols come down, and the market sort of rips higher. So the reason I want to talk about this, because it frames, and these moves frames what both you and I independently sort of arrived at in terms of our single stock ideas and our theme. So let's start with yours. I saw a first buy. I was like, Imran's buying stocks into this sucker, but you're buying puts here. So
this is a mean reversion model, remember, right? So anything that comes up on the strategy compass is a mean reversion thing. So it means if the stock is overbought, it's going to be looking for downside plays. If the stock is oversold, it's going to be looking for upside plays. So clearly we're looking a bit overbought here. And the names that have kind of flashed up on my radar are AMD. Why AMD? Just because it had a massive move post earnings. It was at the bottom of the range. You look how that kind of channel it was carving out. It was at the bottom of that channel going into earnings, and generally the AI names outside of Nvidia had kind of.
And that's up 20% in, what is that, a week?
Yeah, it's
2 weeks?
massive, right? Because they're releasing a chip to compete with Nvidia, basically, right? So the market's now suddenly say, oh, okay, if these guys can compete with Nvidia and they've got massive orders and they're talking about 2 billion worth of sales of this chip next year or something like that, then they're now going to have a bit of a premium comeback for the AI. So we'll see what happens. Nvidia earnings are later in November, I believe. So we'll see how Nvidia trades post earnings, because that might take the steam out of this. But it's popped on that news that the earnings were better and the outlook was better on this kind of new development. I think it's overdone in the near term. So I'd probably use and that's why I'm put it in the YOLO bucket, because you could use 2-week puts to try and play a bit of a consolidation. That's not to say we're going to go all the way back to the bottom of the range. That's not what I'd be looking for. But I just think we do feel like we're a bit overdone here. So that would be what I'd be looking at. It's a similar idea on Netflix. Netflix is a bit more slow burner. It's approaching the top end of the range again.
And its earnings are out of the way as well.
Yeah, earnings are out of the way. There's a lot of supply up here. If you look at where the volume spike was, this is kind of the zone where there was quite a bit of volume, and it has rejected this level previously. So you'd think it's probably not going to blast through this in the first test. So again, you may want to play a correction from this level using deck puts.
I like both of these ideas, and as I mentioned before, it sort of syncs with the theme that we were talking about in our morning note, in that I didn't have a specific stock to look at. I had this theme, and the theme is sort of find names that have been moving like this, because there's a ton of them, ARC and AMD and whatever it may be, and I like I like shorting the stuff that was garbage before, so like AMD's got a new chip. I don't know much about that, but ARC I know is probably going to be garbage no matter what, right? So I ran an implied vol scanner this morning, and this is what we put our founders in. I'm going to put a link to this spreadsheet in the description of the video, but these are all names that have an extremely high IV rank. And so you can see realized vol here versus what the IV rank is. And, these are all names that had just massive rallies. Some of these you just mentioned, right? Some of them are kind of funny, like TLT and the like, but these are all names. You see AMD shows up in here. I actually think that my preferred method of playing mean reversion here would be trying to sell calls or call spreads. I personally like that idea because I think we're going to stall out more than pull down. And so again, you can download this link. You can see the variety of names here, but I like to sell call spreads for November OPEX, which is about 10 days out now. And these names that have moved the most again, because I think we're just going to, at best, kind of top out here. Maybe we get some mean reversion to your point. Before we kind of wrap this up, Imran, why do you go for put buying as opposed to call spread selling, particularly in these two names? Is there any specific reason for that?
Or so I've got on those names, I've got the kind of range. I look at the range on implied vol, the implied vols, and I go back to like an 18-month history. So on that range, I'm seeing the implied vol levels to be relatively low in their range for those names.
Gotcha.
So that's why I'm not net seller of vol. And also, this particular model is one-legged structures. So whilst I don't like selling naked calls in single stocks, I can't tell you to sell a call spread because this is a one-legged. The rules of this company is only one leg. So that's another reason why. Because I agree with you. If you're gonna sell the call spread to keep yourself safe. And so because I have to pick a one-legged strategy, the one-leg strategy here would be to buy a put.
Yeah, I do think the possible exception is, I know everybody, if you read Twitter, literally everybody got long before this move. So congratulations to everybody on Twitter for catching the rally. But since you're all long, selling some calls here could be interesting because this implied vol really got bid up.
Calls, covered calls.
Gamma, so that's some overriding as Gamma sort of tightens up around November OPEX and things, just consolidate and we digest some of these rallies. It makes sense. So thank you for sort of clarifying that and making sure that you and I aren't necessarily at odds in terms of the way that we want to express these ideas. So excellent ideas. I like that you and I are more or less on the same page here. Again, I'll put a link to this spreadsheet if somebody wants to download it. You can do so. Have fun and let us know if you get any interesting trades. By the way, if you have success with anything we talk about here, if you like the things we talk about, to hear about it in the comments. And Imran, also we're begging for likes here because we want to know if people want us to keep this going. So far, views are going up. So
this strategy compass is actually part of my daily product. So literally every day of the week, I have this thing. I have stocks that come up on the radar. I put some trade suggestions in there for people, like the AMD trade, for example. Like before earnings, we had said on here to sell puts on AMD. So we were selling December puts on AMD, struck at the 80 level. The vol's been crushed post earnings. The stock's rallied 15-20%.
And you got the Delta Bang too.
Those things have gone to zero, right? So if you sold those, you did pretty well. So and the good thing is you can test this out for a month for absolutely free, right? So you can sign up to our daily, you can sign up to our bundle, you check out all the stuff we provide, and if it helps you make money, stick with us. And if it doesn't, good luck to you, right? That's
membership should pay for itself. You're a hardworking guy, and look, if you get some good ideas off these things, then
yeah. And I don't claim that every single one of my ideas is going to make money. And
no, anyone that does claim that, you should run from them.
Exactly. The point is, we have systematic processes, we have screens, we look at all this stuff, we have muscle memory, we know how this stuff moves, and it helps us shape our views. And then we try to convert that into some actionable trade ideas that are going to help you navigate markets, and most importantly, not going to blow you up, right?
It's well said, Imran. And obviously, I do a lot together, so I believe in what you're doing over there. So you can get a free trial of Imran stuff. If you go to spotgamma.com, you get a free trial of all stuff as well. So free stuff for everybody is also the second thing.
It's Christmas.
Right. Maybe you put on one of these trades, you make enough to pay for all of our services for the next year. How about that?
Yeah.
That's what the YOLO trade is about, right?
Anyway. All right, man. Until next week.
Listen, one thing before we go. If any of you are confused by some of the things we talked about here, implied volatility, realized volatility, gamma, delta, vega, spread selling, blah, 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 use that QR code top left. That's the hedge. Imran and I put together a options training course. It takes you all the way through what's a put's call, what is a put and call, all the way up through delta hedging and the like. So check out that course called The Hedge. And also, Imran, where can people find you to get the free trial?
So just go to our website, options-insight.com. Everything is on there. It's part of our tools. We have education and we have tools. That is the key to learning options and figuring out how to make money out of this stuff.
Awesome. And we're at spotgamma.com. You can find us at spotgamma on Twitter. Imran is options-insight on Twitter. And we will see you next Monday for this. And then we also do our OpEx live on Tuesday afternoon. So tune in for those.
See you later.
Thanks, bud.